What's going on, family? It is your boy JT, the corporatepreneur, and it's been a minute, y'all. I know it's been a while, but I'm back. I'm going live, and I really wanted to just come and bless the timeline, as I say, in case you guys have been living under a rock. Um, I made the announcement a little over a month ago that I am now a mortgage loan originator. So, in addition to helping folks get access to capital to fund their business, I can now help you with those real estate uh, investing purchases, or even if you are a home buyer, first time home buyer, or experienced home buyer, I can now help you with those transactions and fund those deals for you also. But with that being said, guys, man, I wanted to come live, bless the timeline real quick. I got a couple things I got to get off my chest. Okay. So I've had the opportunity to sit at the closing table or be at the real estate table wearing a couple different hats. Right. So the first hat that I wore was a first time home buyer, right? We got our house built starter home in 2018. Um, and then also I've had the opportunity to sit at the closing table as an investor, right? So in 2020, had our first real estate deal. Didn't quite work out, but we stayed with it, right? So we came back to the table again last year, purchased a single family rental property that we have up and going, and we're closing on another two here soon. Um, but also have had the opportunity to sit at the closing table as an mortgage loan originator, right? So, and with that being said, there's a lot of different things that I've gathered or that I've seen being at the closing table wearing each of those different hats. And so I titled this session here, What They Don't Tell You About Real Estate. All right. So it's a couple of different things that I learned along this journey that I want to share with you guys, my future investors or prospective home buyers, some things that'll help you be well informed. And that way you'll be prepared as you um, start your process. All right. So, right out of the gate, okay, right out of the gate, we getting right into it. I know there's a lot of talk on the internet about this, but shooting you straight here. Um, you need money to purchase a home and or invest in real estate. I'm gonna say that again. You need money in order to purchase a home and or invest in real estate. I think there's a lot of misinformation out there. Or we see only the highlights in terms of, hey, I just closed and I bought a house and I only brought $50 to the table, or hey, actually I got a credit back, for purchasing this home. There's a lot of different things that go into those different scenarios, but overall, you need money to purchase a home. And so if you are a first time home buyer, or even if you're purchasing, you know, or even if you're not a first time home buyer, there are four times you will be expected to pay out of pocket throughout that real estate transaction. The first time you'll be expected to pay will be when you put up your earnest money. Okay. I know you're probably thinking, man, who is earnest and why do I have to give them some money? All right. So, your earnest money is money that you give to the seller and their team, letting them know that you are serious. Hey, I really want to purchase this property. And because I really want to purchase this property, I'm going to give you this earnest money so you can take that property off of the marketplace, right? That's the first step to showing that you are serious. Now, also, a portion of your earnest money can go towards your down payment, all right? It's almost like when you have someone come out to do a service, they ask you to pay a deposit, and then you decide, hey, okay, you know what, you charge me this deposit fee. Now I want you guys to go ahead and execute and provide the service or do the work. That down deposit that you pay now goes towards the overall or total price of them doing providing those goods or services. The same thing when you're purchasing a home. Earnest money can help go towards the down payment, which is the overall purchase of the home. All right. So the second thing you should be prepared or expected to pay for. And I want to real quick want to make sure I got my sound and everything coming through here, making sure you guys can hear me clearly. Making sure this is cool. Okay, all right, we should be good. We should be good. Okay. So the second time you will be expected to pay is when you pay for your inspection. Okay, so this is when you pay. It could be from $300 to $600 is what you would pay for an inspector to come out to inspect the home. They will look for any foundational issues to make sure everything is working right. The quality of the roof, the other things that come with the house, the overall integrity of the house. They want to make sure it's intact, and you want to make sure that you, as a buyer, are making the most informed decision as possible. With my wife and my sister being realtors, I've heard horror stories about people who might have bypassed on inspection, and these homes had severe termite issues, or just a lot of different things that these buyers inherited by not doing their complete due diligence throughout the purchasing process. So the second time you want to come out of pocket will be for an inspection. They can range from $300 to $600 roughly. All right. Now the third time you will come out of pocket throughout this real estate transaction will be for the appraisal. All right. So whoever's funding this deal, whether it's that bank, that lending institution, they need to appraise the property to see, hey, this check that we're about to cut you, or this loan we're about to issue you to go ahead and acquire this piece of property, we got to make sure it's a good investment. We want to make sure that this is something we can stand behind. Okay. So we want to get the value appraised. Now, typically appraisals, there's a couple different ways, but 30,000 foot view would be, it'll be based on the comps or based on the other homes that have sold within that area, within the 1 mile radius um, of that area. That's what ultimately would determine the appraisal, in addition to what the appraisal sees, right? But that's kind of like the overview of it. It's based on the other homes that are in the area, similar bedrooms, baths, so on and so forth, to create that initial appraisal value. All right. And then the fourth thing that you should be prepared to pay for would actually be your closing costs. Like, y'all, it actually costs money to close and finalize the deal, right? So you have to pay your title company. Uh, if there's any other fees that may be associated with the purchase of um, the home, all that stuff will be lumped in. There's a lot of people who have to eat off that deal, depending on which state you're in. You may have an attorney fee, different things like that. That'll be lumped into there. Those are all some of the things that you should be prepared to pay for throughout the real estate transaction. So we've got our earnest money, okay, which some of that can go towards the down payment. We've got our inspection. Want to make sure you want to understand the condition of the house that you're purchasing it in, the appraisal, the actual value of the home, okay, and then the cost of doing business to close out the loan, right? Whatever from your other lender fees that may be in place, the other individuals, the title company, all those other folks who are a part of that transaction. You want to make sure you have enough funds to actually secure the deal. Okay. Um, Kind of building upon the topic of, you need money to buy a house. I want to talk a little bit about down payment assistance. Okay. So down payment assistance. So down payment assistance is basically for those individuals who need a little bit of help getting across the finish line throughout their home buying process. All right. And so down payment assistance can come in two main forms. All right. So we actually have grants. Okay. So what's cool about down payment assistance in the form of grants is that, like, this is essentially free money that you don't have to pay back. Okay. So it's given to you. You don't have to pay it back. I like grants the best, right? To be quite honest, it's almost as good as cash in some instances. And the second form of down payment assistance that we have, and you got to be, I want you guys to really understand this, because um, a lot of people think, oh, down payment assistance, okay, cool. I don't have to bring as much money, to the closing table or to put down as a down payment, whatever the case may be. And there's certain red tape, there's certain guidelines that come with this money. So the second type of down payment assistance would actually be a loan. Okay. This loan is given to you. It's actually shows up as a second mortgage or a second lien on your actual transaction that you will have to pay back. So you will have your first mortgage payment that you will be paying back, and then you have your other down payment assistance that which will be the second lien holder, that you will be paying back as well. Now, this is important to understand the guidelines of the type of down payment assistance you have, because there are certain nuances that come with down payment assistance. Some programs will affect your interest rate. You may be charged a higher interest rate by accepting this down payment assistance. Also, when it comes to refinancing or um, selling your home or whatever the case may be, there's certain guidelines or stipulations that will require you to pay back that down payment assistance before you can realize any equity, or before you yeah, before you can even take advantage of some of the equity that you might have built, throughout um, the time of you owning a home, or for you to even take advantage of some of the other benefits of being a homeowner, you would have to settle up and pay back that down payment assistance first. There's also some down payment assistance programs that have a recapture period, right? So let's say for a period of 5 to 15 years, you will be expected to all of the payments will be recapturing, okay, till you get that down payment assistance amount that you were loaned, that you were borrowed, until that's completely paid off. There's a time window typically attached to that as well, right? Um also too, there are certain clauses that say, hey, if we give you this down payment assistance, you have to stay in this house x amount of years. If you move within that time period, that could trigger that down payment assistance to be due. So I said all that to say there are some nuances with down payment assistance. Grants are going to be the most straightforward option. They typically come with less requirements or restrictions. When you have some of your other local or even state programs, that's where you really want to watch and monitor the fine print in terms of what you can and cannot do, and how that impacts you being able to access things like equity within your home. So down payment assistance, it's not bad. It's a great option for people who need a little help getting across the finish line. If you can get a grant, great. But if not, the best down payment assistance that you can access would actually be your own, that you provide to yourself. There's no bells and whistles. You don't have to pay anyone back. It's your own money. You can do whatever you want with it. Right. So that's pretty much down payment assistance there in a nutshell. So I want to talk a little bit about credit, y'all. Okay, so let's talk about credit in this home buying process. So I get a lot of questions about, man, like what type of score do I need, or how does my credit need to look in order for me to get into a home? And the answer is that everybody's situation is going to be different. So the best thing you can do is to not self-diagnose yourself, but to get with an actual lending professional like myself. So that way we can look at your credit profile and give you an actual game plan to help you get into a home. Because what you don't want to do is, you don't want to think, hey, you know what? I've got this number credit score. I know I'm ready to get into a home, right? And then you come to us and it's like, hey, okay, your score is solid, but there's some things that we might need to address on there. Maybe it's a foreclosure, maybe it's a bankruptcy, or maybe it's some things that you thought you had to address on your own, but actually because of the type of product that we're using, you may not need to address it. You may not need to address that collection or that medical bill at all, right? So and also too, what I was getting to with that as well, it's not just about your score, but it's really about what's on your credit profile. So I'm going to go through the FICO scoring model real quick, because this is your guiding compass to really help you win with anything you're trying to do with credit, right? So the FICO scoring model, this is what 90% of lenders use to make a lending decision and ultimately determine your level of risk. So I don't care if you're getting an auto loan, credit card, mortgage, whatever the case may be, there's a FICO scoring model um, set aside for that particular product or that thing that you want to acquire. All right. So, with that being said, 35% of your score is going to be your payment history, your ability to pay people back and pay them back on time. I always tell people that's the best form of credit repair, paying people back and paying them back on time. All right. The second bucket of your FICO score is going to be your utilization. All right. So, utilization is basically the amount of credit that you've used on your accounts that you allowed to report each and every month. So, for example, if I have a $1,000 credit card, and I've used $900 of it, I have a 90% utilization. Now, the sweet spot of where you want to keep your credit profile in terms of utilization, you want to keep it at about 10% or less. Okay, so 10% or less is around where you want to have your utilization reporting. Now, I know some of the other sites and apps they'll say 30%, but that 10% or less is where you can really see your scores improve and or build. The next thing is going to be that credit age. Okay, how long have you established credit? Right. So a lot of people have student loans. That's typically the oldest trade line on most people's credit reports, especially if you're kind of my age, you've been out of school 10, 15 years, whatever the case may be. That's going to be a big account that's going to be helping drive that credit age, right? What's the average age of your credit, which can be an important factor. It roughly accounts for 15% of your score. A nice sweet spot is to be around that 4.5 to 5 year range, in terms of at least on the business funding side. But even as an established individual looking to acquire a home, right? At least 2 years of age you want to have on some of those accounts to really put you in the best position as possible. And then 10% of your score is going to be the credit mix. So you get points for being able to show good stewardship with various different types of credit products. So whether it's a credit card or auto loan, um, an installment account, whatever you name it. There's points you can get by just managing different types of credit products. And then your other 10% is going to be your inquiries, right? The hard inquiries. How often are you applying for new credit? If you got too many hard inquiries, you could look thirsty in the eyes of a lender. Okay. Some folks go, you try to get auto loans, you go to some of these places, they shotgun your credit profile across all these different banks or lending institutions. Now you've racked up 20 some odd inquiries at anywhere from 3 to 5. It could affect your credit profile depending on where you are, anywhere from I'd say 2 to 5 points. Those things can impact our credit as well. So the best thing that you want to do is you want to put as much distance as you can between the derogatory items on your credit report, right? So, like I say, man, those late payments, those are things that can really impact you or hurt you, potentially play a role in making or breaking your ability to get into a home. So, we want to focus on building out a strong profile. Now, in terms of accounts that you want to have on your credit profile, I would say, now the minimum based on some of the guidelines, for some of your mortgage products, they'll say about two trade lines for about 12 to 24 months. My personal opinion, knowing the knowledge and having the knowledge that I have with working in the business funding space or just being in the credit space over these past 3 to 4 years, I would say if you have about five trade lines, that really rounds out and makes a pretty solid credit profile to start. Okay. That's a solid credit profile to start. Okay. And so, just an example of what these five, trade lines and what these five accounts could be. You could do two credit cards. All right. I like credit cards. They're revolving. They really can show a gauge of how you manage, debt and your finances, especially when you keep your utilization low. All right. So you got two credit cards on there. Then from there, you can do some type of installment loan or maybe even reporting your rent, right? That can be a positive trade line for you. And then from there, you can also do, some people may have an auto loan. You can have your auto loan reporting on there. And if you got that student loan that I talked about, you could have that reporting on there as well. So that will then give you your five to, I guess, six accounts to kind of round out that credit profile, to make you look solid in the eyes of a lender. Okay. And then you want to have a nice age with these accounts as well. So 12 to 24 months, consistent payment history, consistently using these accounts. It only helps build and boost out your credit profile, in the end. Right. And like I say, it's not about your score, but it's about what's on your profile. Okay. Um, Let's see what else. So let me talk about this other topic real quick, okay? So we have renting versus buying, okay? Renting versus buying. In this current market that we're in right now, you have landlords who are asking for more from renters than I would ask from my potential clients trying to buy a home as a mortgage lender, right? So there's some things out there now where you have landlords saying that you need to make three times the monthly rent in terms of, based off of, whatever that income is that you're bringing in. I need to see three times the rent in order for you to even be considered to move into, this property that I have. Or, they may want 3 months rent up front plus, deposits and different things of that nature, right? So the requirements have gotten to be a little bit more, um, I guess extreme, from the renting side of things. And so that's one reason why I personally, whenever people ask about renting or buying, I'm always going to err or push on the side of purchasing and owning. One of my biggest regrets is not purchasing more real estate and not purchasing more real estate sooner. All right. So, and statistically speaking, even right now, okay, uh, every home on average appreciates around 3 to 5% each and every year on average, right? I'm sure there may be some anomalies out there depending on what market you're in, but for the most part, on average, every home is going to appreciate 3 to 5% each and every year. And you have the opportunity to either say, hey, you know what, I'm going to pay that 3 to 5% uh, as a renter, or I'm going to earn that 3 to 5% as a homeowner and have that equity build up over time, right? And that's really the decision that you have to make. And like I said, I'm always going to err on the side of owning for that same reason there of you being able to have a home. It's going to appreciate. It's going to increase in equity, and then you have access to equity that you can do other things with. One, if you want to do a cash out refi, or you want to take out a HELOC on your home to invest and do some other things, you'll have that ability to do that. Or even if you want to upgrade your home in the future, right? You have the ability to do that. You can leverage that first purchase to go ahead and make another purchase, right? Or even upgrade to your next residence. So I like the idea of trying to purchase now because it gets you into the game early and you can leverage that first experience to have a better second experience. Um, and then two, just kind of even building upon it. Like I believe that there's a high cost of waiting, right? So not even outside of the 3 to 5% that you may be losing out in equity building, but now each year that you wait, that benchmark, that entry point gets higher and higher each and every year for you to try to get into the game. All right. So I'm going to give you guys some statistics here. All right. I'm gonna give you guys some statistics. This is the part where you want to save this video where you save this live. I think I got a comment here. Okay, no, I think that might be my own section there. All right, so this is something that I want you guys to take note of. So as of 2024, okay, um, so as a, so 2024, the median household income in the U.S. is approximately 74,580. This is according to Census.gov and Nielsberg. The median home price in the U.S. was around $416,100 in Q1 of 2024. Based on the median income of 74,580, a household could afford a home priced up to approximately $223,740. So this means that a household would need an annual income of approximately $138,700 to afford the median home price in America right now at 416,100. So, which means that this is a $64,000 income gap to be able to purchase the median home in the US. And I just shared that statistic and I shared the information with you because I really want to put to bed these conversations about 50-50 this or that, or who's paying what, who does this, who does that. In this economy, it is extremely important for people to come together. Actually, I've got clients right now, their siblings, their sisters, they were each in the market to look for a home. And instead of both of them looking for homes individually and not having that much of a purchase power to even purchase the median price of a home, the average price of a home, they decided to combine their income. And now they can purchase a home that's large enough for them and both of their families. So they still have the space they need to function. Right. So I know this market is a little crazy, even just based off these statistics here, but we've got to start working together as families, and get back to some of the teamwork that has kind of helped build families, and some of the, you know, I would say culture and ideals of a family, right? Like we've got to start working together, um, more so than ever in this economy. All right. So that's my take on that. The next topic that I have, I want to talk about taxes really quick, y'all. Okay. Let's talk about taxes really quickly. So if you're a W-2 employee, yeah, so well, regardless of where you are on the spectrum in terms of taxes, I want you to make sure you are seeking a tax professional, or if you're doing them yourself, make sure you're well versed and you have an idea of what the implications will be based on how you file your taxes and what that would mean for you to pursue your goal of home ownership. I've got clients right now who've come to me who've, not only do they have their W-2 income, but they've got these businesses that they started, and a lot of them have written off a lot of income and losses, but those write-offs have negatively affected their buying power and significantly, um, reduced the amount of home that they could essentially purchase and qualify for. And so it's okay, you guys, to pay some taxes. It's okay to owe a little bit, right? We don't have to get these big returns. And like I said, I'm not a tax professional. I'm not giving financial advice. I'm just telling you from what I see as a lender, trying to put people in the best positions possible. You don't want to be writing off all of your income or claiming these big losses, because we have to factor that in depending on your situation with your business. We have to factor that in, to determine how much home you can afford. And you don't want to shoot yourself in the foot by getting too crazy or too greedy with your taxes just to win a little something or get a little refund here or there. But it could cost you big in the long run. And I see this in the same thing with the business funding side as well. You don't want to write off these large amounts of income or too much income. You got to be able to show that you're making some income so it can support the amount of funds you're asking for. Okay. So that's another watch out there for my folks as it pertains to taxes. All right. So now this is the third piece here. I'm going to talk a little bit about me as a mortgage broker. Right now, you guys have a wide variety of options that you can choose when it comes to purchasing a home. Some of you guys may go to your traditional banks or credit unions, whatever the case may be, or you may come to a broker such as myself. I'm going to give you three reasons why you should be looking to work with me, to help you purchase your first home or invest in real estate. All right. The first reason why you should work with me is because I believe I've got some of the best programs in the marketplace. So, you guys coming to work for me is like getting a tailor made suit. It's like getting something that's custom made specifically to you and your needs based on your credit, your income, your assets. I've got access to a wide variety of lending partners who could help meet your needs. And not only can they help meet your needs, but we can do it at a great price. You see, guys, I work in the wholesale channel. And when you think about wholesale, you should be thinking, the thinking in your mind the original cost, right? So this is the base cost. Hey, man, I got this wholesale. It's a great deal before it hit retail, right? Before they added all the markups and things to it. That's pretty much what I provide to you guys who are looking to purchase a home. I provide you guys wholesale prices, wholesale products at a great rate. That's another reason why you should work with me, right? So two, in addition to that, right, I kind of talked about this already, but from a pricing perspective, You guys, there are banks and lending institutions that compete for my business. Okay. They compete for my business. So, which means that they may offer me special rates, they offer me special pricing. And because this is at wholesale, I can pass those savings and those benefits on to you as the consumer. I don't have to line my pockets, right? This is the way this broker system is set up in the wholesale marketplace. And you guys get to take advantage of that, right? And then the third thing, third reason why you guys should work with me is because I believe we've got the best process, you guys. So my team is composed of uh, professionals and leaders who've worked at the guaranteed rates, the loan depots, some of your other popular, banks and lending institutions. We've got all that knowledge, 20 years of experience into one house, and we've essentially perfected this process to make things easy for you as a consumer, right? So, if you're ready to feel that, right? If you're ready to see what that feels like, and a lot of you guys, I know you don't even know what you're missing just yet, right? But I want you to go ahead and tap in with me. Comment ready below. I'll send you my link. That way we can work and we can do business together. But those are three reasons why you should work with me, your boy JT. All right. So let's keep moving. I had to throw that quick commercial break in there. So moving right along. What else do I have here? Okay. Well, actually, you know what? I think that's all I have, y'all. I think I ran through that pretty quickly. That's all I have for you guys. But yeah, I just really wanted to come live real quick and once again let everybody know, hey, I am here to service you guys as a mortgage lender, right? I cannot wait to be a part of your home buying process or your real estate investing journey. You guys, I really do believe I've got some of the best products in the marketplace, the best prices, the best process, and I'm really ready to serve you guys as a community, right? Like, there are roughly 8 billion people in the world, and not one of us have the same fingerprint. So, which means that when I touch something, when you touch something, you literally leave a mark on it that nobody else can. Okay, nobody else can. And I feel that same way as I enter into this industry of mortgage lending and helping other people in this real estate game. Like y'all, like my fingerprint is crazy. Okay, and this mark that I can leave, nobody else can do what I'm doing, right? Based on my experiences, the things that I've encountered, the knowledge that I have from other people. Yes, there are a bunch of LOs out there, but nobody's going to do it the way I'm going to do it. Okay, so if you want that experience, I can't wait to work with you. I'm excited to work with you to be a part of your journey. Go ahead and comment ready below, okay, with this video. Comment ready below, or I believe my link should be attached to this video. All right, so go ahead and click that link. You can start filling out your application and then we can go from there. Or if you want to give me a call or shoot me a text, all right, my phone number is area code 317-656-9682. Phone number once again is area code 317-656-9682. And I can't wait to help you guys, right? I cannot wait to help you guys. And a real quick plug, man, I've got some phenomenal programs. I keep saying that. So one program that I have right now, I've got up to $15,000 in down payment assistance um, for first time home buyers. Okay. First time home buyers up to 15,000. Actually, I take that back. Let's rewind. I've got up to $15,000 for home buyers in general. Okay. There are certain requirements that you will have to meet, take advantage of either one of these programs. But bottom line is I've got access to some capital to help you guys along your journey. This program here now, ideally, I believe this program would be great for people who are purchasing at some of those higher price points. There's no income limit with this program. So as I kind of mentioned to you guys before, when I talked about down payment assistance, there's certain guidelines and restrictions. Sometimes you have to be in um, there's a AMI percentage in which in terms of the income that you can only make to move or live in this or purchase in that area and take advantage of the program. But this particular program, there is no link, there is no income limit. You can purchase a home anywhere. Okay, you can purchase a home anywhere. So if you're ready to see if you meet those requirements, especially for those of you guys who are your high income earners, you're looking to purchase those homes in the 400 to $800,000 range, and typically, there is no down payment assistance for you guys, right? We purchased our first home in 2018, or actually we had our home built, y'all. I was scouring the internet. Hey, well, can I get down payment assistance? We made too much. We didn't qualify for it, and the area that we were moving slash building in, that wasn't an area where they were giving out assistance programs, right? So, but now it's kind of cool because in 2024, you could take advantage of that, right? High income earner purchasing, homes between that 400 to $800,000 range. Now you got assistance out there. That's crazy. Okay. And I've got access to it. Right. And I want to help you guys keep some money in your pocket throughout your home buying process. So go ahead. You can comment right below. You can click that link that should be attached to this video, or go ahead, send me a DM or even text me. Like I say, phone number is area code 317-656-9682. And I will talk to you soon. Peace and love.